Is Bitcoin's legendary 4-year cycle dead, or are we witnessing its most important chapter yet? This question is dividing the crypto world's smartest analysts, and the answer could determine whether we're approaching Bitcoin's final peak or just getting started. The data tells a fascinating story. For over a decade, Bitcoin has danced to a predictable rhythm. Every 4 years, following each halving event, Bitcoin enters a euphoric bull market that eventually peaks before crashing into a brutal bear market. 2013, 2017, 2021, each cycle delivered massive gains followed by devastating corrections of 80% or more. But 2025 feels different. Institutional adoption is exploding. Spot ETFs are bringing Wall Street money into Bitcoin. Corporate treasuries are stacking sats. The question isn't whether Bitcoin will rise, but whether it will follow the same timeline that made early investors incredibly wealthy. Glassnode, one of crypto's most respected analytics firms, just dropped compelling evidence that the 4-year cycle is alive and well. According to their latest research, Bitcoin's current price action is tracking historic patterns almost perfectly. We might be further along in this cycle than most people realize. The evidence is everywhere if you know how to read it. Long-term holders, those who've held Bitcoin for more than 155 days, are taking profits at levels comparable to past euphoric phases. This isn't random selling. This is smart money recognizing that we're approaching cycle peaks. The demand data is equally revealing. Capital inflows into Bitcoin are showing signs of fatigue. Spot Bitcoin ETFs have posted outflows of $975 million over just 4 trading days. When the hottest financial product of 2024 starts bleeding money, that's a cycle signal worth noting. Bitcoin's price action supports this analysis. Since reaching a new all-time high of $124,128 on August 14th, Bitcoin has dropped 8.3% to $113,940. This isn't a crash, it's a classic late-cycle correction. Here's where the timing gets interesting. If Bitcoin continues following its typical cycle, peak highs could arrive as early as October. Glassnode's analysis shows that in both 2018 and 2022 cycles, peak highs were reached just 2 to 3 months beyond where we currently stand when measured from cycle lows. Crypto analyst Rect Capital has been tracking this timeline precisely. If the Bitcoin cycle follows the 2020 pattern, the market will likely peak in October, exactly 550 days after the April 2024 halving. That's just 2 months away. But not everyone agrees this cycle will play out traditionally. Author and investor Jason Williams points out that the top 100 treasury companies now hold almost 1 million Bitcoin. That's $112.17 billion worth of institutional Bitcoin that didn't exist in previous cycles. Bitwise Chief Investment Officer Matt Hogan is even more direct. He declared the Bitcoin cycle dead and expects an up year in 2026. Hogan argues that having cycles matter less each time and improving interest rate cycles are creating more favorable conditions for crypto. The institutional argument is compelling. When MicroStrategy, Tesla, and hundreds of other companies treat Bitcoin as treasury reserves rather than speculative assets, it changes market dynamics fundamentally. This money doesn't panic sell during corrections. But here's what the cycle believers understand. Institutional adoption doesn't eliminate cycles, it might amplify them. When sophisticated investors start taking profits based on historical patterns, retail investors often follow, creating the same boom-bust dynamics that have defined Bitcoin for over a decade. The speculative behavior supports this theory. Glassnode noted that slowing appetite for Bitcoin has coincided with a surge in speculative positioning. Open interest across major altcoins briefly reached a record high of $60 billion before correcting with a $2.5 billion decline. This is classic late-cycle behavior. So where does this leave us? If the cycle believers are right, we're approaching the most important 2 months in Bitcoin's recent history. October could bring either massive new highs or the beginning of the next bear market. If the institutional camp is correct, traditional cycle timing becomes irrelevant, and Bitcoin could continue climbing through 2026 and beyond without major corrections. The truth is probably somewhere in between. Bitcoin cycles might be evolving rather than disappearing. Institutional money could extend cycles, reduce volatility, but not eliminate the fundamental human psychology that drives boom and bust patterns. Either way, the next 60 days will be fascinating. Whether Bitcoin peaks in October or